Good afternoon, everyone, and thank you for attending and joining Sidoti's December investment conference. My name is Michael Matheson. I'm an equity analyst with the firm, and we're fortunate to have with us today the folks from Highland Copper. Before I introduce them, just a couple of housekeeping things. First of all, at the bottom of your screen, you'll see a circle with three dots labeled More. If you click that, that will give you an entry to a Q&A box. We really encourage questions. It's how everybody gets the most out of this, both the audience as well as the presenter. So with that, let me introduce Barry O'Shea, CEO of Highland Copper. Barry, please take it away.
Michael, thanks very much. Appreciate you hosting the conference and looking forward to presenting our story to your investors. And it's nice to be here as well off the back of, a host of pieces of good news that have come out of our company. I think we've demonstrated some really strong execution over the last year, and I'd like to walk you through that. But we're also here at a time when we're seeing incredible tailwinds from a federal perspective in the US for near-dated copper developers. And I think that's a really exciting element of the overall story. And maybe I'd say as well, despite our execution and of course the favorable tailwinds in the US, I think our share price has maintained at a very modest valuation. And you'll know in natural resources where a lot of stocks have moved away, let's say from a valuation perspective. So I certainly see with us going into 2026 and a really positive path towards a construction decision, productions and cash flow multiples. I think we have a real opportunity for value growth from the point where we sit today. And I look forward to walking your investors through that. At a high level, I guess I'd characterize our flagship project, the Copperwood project, as one of the most advanced copper developers in the US. So what does that mean? First and foremost, we have a feasibility study complete and we are fully permitted. I can't understate the value of that type of de-risking when you're looking to make a construction decision. And not only that, we've actually initiated early site work, and I'll walk you through it. It's created some real regional credibility in terms of how we'll operate from a responsibility perspective. And of course, we've also awarded all of our detailed engineering contracts across mine, process, water management, et cetera. Again, another meaningful step as you think about moving towards construction. And so with all of that, we'd like to make a construction decision the second half of next year. In that example, we'll look to initiate construction in 2027. And it gives us visibility to targeting production 2029. And that's an important date. That means that we can look at bringing new copper production online in the US within the time frame of the current administration. And I think you'll see there's going to be some real read-through in terms of our capacity to draw financing as a result of that. Let me just give you a quick high level as a starting point. This is the map. You can see we sit on the northern side, the western side of the Upper Peninsula of Michigan. It's a wonderful mining district. Obviously, there's the capacity to supply copper downstate. I mean, we know the US needs copper, and most specifically, industry in Michigan, the likes of Ford and GM, need copper. We enjoy a lot of community support because I think we've demonstrated that we'll operate responsibly. And of course, we'll bring some really nice jobs to the region with the benefit of operating on private land. And I think the read through there is that we have no federal nexus, and it means our permitting is done in place. And as I say, a really strong de-risking feature of the overall company. But maybe the biggest and most important thing is access to both federal and state capital, where the US finds itself today. Arguably, behind to some degree from other countries, certainly China, in terms of driving domestic mineral production. And I think the US has seen, both from a defense and energy perspective, the increasing importance of minerals like copper. I was interested to see a fact the Department of Defense identified that copper is the second most widely used material in its department. So you're beginning to understand why we're seeing pushes both from a permitting perspective, but more so a financing perspective into companies like ours. So you'll see on this map here, obviously, we have our flagship project, the Copperwood project, and not far down the road, you might know that we own a 1/3 non-controlling interest in the White Pine project. And I just wanted to walk through one thing. We've made the decision in recent weeks to divest of that non-controlling interest. And we think it's really set the company up incredibly well and focused as we step into 2026. Drawing value for that non-controlling interest is challenging, but drawing capital and cash to finance our flagship project is what we think is strategically the best for the company. If you take a look on the left-hand side of this table here, that's what our capital structure looks like before this divestment. And, you can see that we have, approaching 12 million in debt. That is the capital that has been going into the White Pine project, where Kinterra has been funding our portion. And of course, we have 7.5 million in cash. And that's a challenging prospect when you bear in mind that there would be two assets to allocate capital to. On the other side of this divestment, where the total transaction value is 30 million, of which 12 million is debt forgiveness, and the other 18 million is cash in the door. We have no debt, 26 million in capital, fully funded to get to a final investment decision in 2026, with runway beyond that as we think about maintaining our capacity and our option value from the project. And importantly, a sole focus on Copperwood. No question is in terms of where our capital will go. That is where we're driving the company at this point in time. So with that being said, let me get into a little more detail around the Copperwood project itself, help investors what our path is here in the coming 6 to 12 months. So just at a high level, I guess the first thing I wanted to identify is that Copperwood is very well understood. You'll often hear that interesting statistic that it takes the best part of 20 years to build a mine in the US. Interestingly, we're not necessarily bucking that trend. We just happen to be at about year 16 at this point in time. That means a whole host of work has been put in over time. The mineralization is well understood. We intend at this point on using a room and pillar mining methodology, which is the methodology that was used at the neighboring White Pine project for the best part of 50 years as it operated. This year, we did a fourth metallurgical campaign on the project. Actually, we brought in ultrafine flotation technology and improved recoveries. But we really have a good, strong technical feel for the project in a region that is well-based from an infrastructure perspective. And it gives rise to a really nice scaled project for a company like Copperwood, an 11-year mine life with 30,000 tons or about 70 million pounds annually produced copper. And I would note that because we're at feasibility level, of course, we're only using our measured and indicated resource, but I'll show you shortly there's considerable inferred tonnage and true belief that this project will certainly be 15 to 20 years with other exploration upside. And just a quick photo on the right-hand side there, just to demonstrate that we've gotten going on initial capital. We've done initial site impacts. That's a photo of some of the stream diversion structure that we're building around the future construction area. So creating a clean, dry area to work, putting capital into the project. There's some economics there, but I'm going to hold off on those because I've got a nicer slide that just demonstrates, in particular, the leverage to changes in copper price, and of course, some of the upsides to those net asset values that we see. I mentioned permitting. Again, that's at the top of the list. If you compare us to peer companies and you look for companies that are in great jurisdictions at feasibility level and fully permitted, I think the list certainly is on no more than one hand, and we are on that list. These are the 7 state permits that we need to operate in Michigan. We've also demonstrated in the last year, 2 of these permits have been either amended, updated, or renewed. So we're in good standing with the permitting authority. They've seen the work that we're doing on the ground, and we stand, I'd say, just in good standing with that authority. The region is blessed with a lot of regional infrastructure. You can see the project there. It sits up against Lake Superior. That is a very important consideration for us, and we've taken a lot of environmental precautions to make sure that we're operating safely. And I'll walk you through those shortly. But you can see central on that map is Highway 2 coming east-west. There's 4 or 5 towns regionally. There's rail, airport, roads. There are 2 ways that we can bring power to site, be it natural gas or through transmission lines. So this is a really nice area, only 2 hours down the road. The Eagle Mine, Lundine's mine, is operating successfully, and we look forward to being the next operator in the region. I mentioned life of mine, and it's interesting. Sometimes I hear from investors that Copperwood is small. I certainly challenge that. There are 3.7 billion pounds of copper defined across full MI and I. Like I mentioned to you, only half of that, and you can see that's the 54 million tons at a nice 1.5% that actually gets utilized for the purposes of defining your initial mine life when you're at feasibility study. But you can see there's a significant 79 million tons at a really nice also 1.1% grade that can be brought in over time. And this is a deposit where mining a seam. So when you've when you've drilled to inferred, the capacity to drill and convert to measured and indicated and bring tonnage into mine life is very high. Again, demonstrating that we see this as a 15 to 20-year mine life. And again, an important distinguishing point is not only do we have a resource, but naturally at feasibility level, we've met the full 43-101 obligation on mineral reserves. Again, a step that many others have not taken. And this is what gives rise to that 11 years, 800 million pounds of copper, so about 70 million pounds per year for that 11-year time frame, which naturally will look to extend. We talked about some of the environmental mitigations. We take our obligation to operate responsibly in Michigan very seriously. I will tell you that Michigan also has really strong environmental regulation, and we are comfortable with that. We think it's our obligation, and we believe that we can operate very well in this region. And let me walk you through a few things that we've done. Obviously, we've placed financial assurance as we've done some initial site impacts. We've already started creating mitigating wetland in compensation for the wetland that we have disturbed. Alongside the permitting authority, we have confirmed as a group that the ore that we will put to surface is not acid generating, a really important environmental aspect as you think about placing both tails and rock at surface. We as a company have elected not to draw water from Lake Superior. That's obviously a precious resource and important to local residents. That's a commitment that we've made. And equally importantly, we are doing our design on the tailings to a full 90% in advance of a construction decision to make sure it's done safely and again, respectful to the region. So with that, let me take a look at some of the project economics, as I said I would do. And interestingly, our feasibility study was done at a $4 copper price, and it's nice economics, 170 million NPV with an 18% IRR. But bear in mind today, copper futures are sitting closer, candidly, to 550. If you step up to a $5 copper price, the net asset value actually triples, and the IRR is 33%. Bear in mind that doesn't include potential life of mine additions and other state and federal funding we might receive, not to mention other optimizations that we can make around the project, in particular the process flow upsheet updates that we had made, and I'll walk you through those shortly. So we feel very comfortable about the underlying asset value. Candidly, if you move towards that $6 copper price, you continue to see that leverage moving the asset value to 850 million and a really robust 50% IRR. Even thinking about valuations from a cash flow perspective, at a $5 copper price, it's over 200 million of operating cash flow annually. And you think about multiples of 4 or 6 times of operating cash flow, or you look at these underlying net asset values, you have a real strong pathway to that $500 million or $1 billion. Bearing in mind that our market cap today is about 65 million US, and perhaps 20 of that is in cash, you can see that we have an asset value that is the capacity as we execute to really drive towards some really strong valuations. And we look forward to moving that. Now, to get towards those valuations, you need to execute. I mentioned we had done some very good work on site, building regional support, building our team. One really nice thing that I'm always able to state is that all of those townships that you'd seen on the map earlier, as well as boards and regional municipalities, have all provided formal resolutions of support for this project. This project is wanted in the region, and we look forward to moving it forward. I'd also mentioned we've gotten a start on our phase 1 engineering, or I should say, actually, we've concluded our phase 1 engineering. So really defining design criteria for the project, most specifically having real success on the process flow sheet, and I'll show you that shortly. But we're continuing through such that in early 2026, or I should say the first half of 2026, the goal is to be at 40% engineered. And really the significance of that is, A, you have enough information to make a responsible construction decision, but moreover, you have enough information to defend yourself under project finance, whether you're going down private routes or certainly from a federal perspective, defending the debt that you need to take on. So we feel very comfortably placed here as well. A quick word on process redesign. This is one of our biggest optimizations, and really this is an improvement on those feasibility study economics that I just showed you momentarily ago. We proved out with the use of ultrafine flotation technology, that's the Glencore Jameson cell, We're increasing our copper recoveries by about 2 percentage points. And I think you'll understand if you do a similar mining rate, but simply get more copper, that drives the net present value of the project really nicely. We've done that with a smaller scale plant using less power, smaller footprint, environmentally responsible. We feel very great about this outcome, and we'll naturally look to get similar outcomes as we look at the mining side of the project. Now, as you think about stepping into a year where like to make a construction decision, of course, the project needs to be ready, but equally the company needs to be ready. The balance sheet needs to be strong and your focus needs to be there. So let me walk you through some key developments over the last few months that I think should give investors comfort that we're well capitalized and also trending towards a very positive project financing. We announced in September a letter of interest from the US Exim Bank for 250 million in project financing. And while those are non-binding and relatively early stage, the key takeaway is that the Exim Bank has gone ahead and acknowledged that we are eligible for this type of funding. And you're only eligible for this funding if you are truly advanced. Early stage explorers are simply not eligible. So it really is a meaningful step. And as we look at the focus that Exim Bank is taking, you might have seen a recent headline that they have committed $100 billion in funding to critical mineral projects. The likelihood of getting through this at a reasonable speed and coming to the other side of it, understanding the tenor and the cost of capital, in the next 6 to 9 months is imminently feasible. We will naturally continue to do work in Washington. The other departments are active here. The Department of Defense in particular has been very creative in both debt, grants, and equity, and will continue to chase down those paths. And also, putting federal support aside, we have Orion on our shareholder register. They own 28% of our company. They've recently put together a $1.9 billion consortium with the U.S. International Development Finance Corporation with the noted mandate of advancing short-dated projects. So feeling comfortable there, combining the fact that we're also in discussions with Glencore. I think you'll understand that our offtake is not yet spoken for. That's a very valuable asset as you step into project financing. Another couple of key developments, maybe just a few more slides here, Michael, before I pass back to questions. But we had a bit of an overhang. Greenstone, which is a natural resource fund in the UK, they own 16% of our company. We knew that they are wrapping up their fund broadly and needed to step out of their position in Highland in early 2026. And we orchestrated a very orderly trade where Greenstone stepped out and we brought in about 6 new institutional investors. Very pleased with that trade, remove the overhang, reduce the shareholder concentration, and naturally increase the trading float as we go forward. So again, another step to get the corporate structure in place as we step into 2026. And that's what it looks like at the moment. Orion, who have been long-term supportive shareholders, remain at 28% of our company. At Condir, who are a resource fund based in Texas, actually through that Greenstone trade moved from 16 to just under 20%. And importantly for the company, that new set of institutional holding at 12%, that's arguably the first time that we brought in institutions and a real validation from that perspective. Just a couple slides left here. I like to take a look at a peer comparison, and this is for those who really follow mining. Some of those names on the right-hand side there, particularly Arizona Sonora and Foran, have had some really strong equity movement in the last year. And I just want to demonstrate that Highland Copper sits alongside some of these names. When you look actually where we stand out well, of course, is that we are arguably the most advanced with feasibility study complete and the only fully permitted project along this group of peers. But even when you look at M&I grade and capital intensity, again, we stand well. I think this is the category that we belong in. And certainly as we market, we'll be demonstrating that we're a project that is at and ready for construction and truly actually deserving of the values that some of these other companies are seeing. Just to close out here, just a refresher, at the end of the day, value in mining, particularly for developers, comes through execution. And I won't take you through all of those bullets and tick marks, just to reflect that across engineering, site work, corporate structure, and of course, focusing the company with the sale of White Pine, we've really established a strong base as we step into 2026. I'm very excited about the catalysts that we think will come. We're driving improvements from a mining perspective. We'll continue to run through in the first half of 2026 state and federal opportunities for funding and broadly work through the project financing. And really, all of that puts us in a position to consider a construction decision in the second half of 2026. And you really start to drive value as you step through that development timeline. So, Michael, with that, listen, I'm very happy to pass back for some questions. It's an exciting time for the company, and yeah, happy to hear what investors have to say.
Okay, terrific. Very interesting. And we did get quite a few questions coming in. Um, Let me start with one that's kind of a big picture question. How sensitive are the project economics to copper price fluctuations?
Yeah, and I think I'll have shown some of that, but they're incredibly sensitive. And it's interesting. What it does tell you is that at a $4 copper price, while the project works, it's relatively low margin. But when you're low margin at $4, when you add a dollar to five or another dollar to six, really the torque is very high. So I think I demonstrated moving from a $4 to $5 copper price. There's a tripling of net asset value, and it nearly doubles again as you move to $6. So what's interesting though is I like to demonstrate that there's real leverage to changes in copper price. And, if copper was at four or below today, you could view us as, an option. But really, we're not an option. We're very much in the money. We're a constructible project, viable from a constructability and financing perspective, with ongoing leverage to changes in copper price, which candidly I don't think have been recognized in our share price.
The next question is a little bit technical. The questioner asks, how do you think about the added costs to CapEx and time frame from drift and fill versus the added benefits? Any risk of missing some of the tailwinds to copper prices itself that we've seen?
Yeah, so the question is referring to some optimization work that we're taking on right now. I think right now the mine is designed as a room and pillar methodology. And, for those who don't know, that means you're leaving large pillars of your resource behind for structural integrity. And naturally, you do not mine a pretty significant portion of the resource. At room and pillar, you recover about 60 to 65% of the ore body. In a drift and fill, you actually recover more in the range of 90 to 95% of the ore body, and then you use what you've mined, you use the waste to create a paste and put it back in for structural integrity of the mine. What we've learned is that certainly at a $5 copper price, those additional revenues pay for the increased capital and operating costs from a drift and fill operational perspective. And as you step towards $6, of course, increasingly so. What's most important for us, though, is to demonstrate that we can actually create a competent paste. It has to have structural integrity for the purposes of the mine. And that's something that we're going to look to learn over the coming months. And certainly, while we think it's possible, I wouldn't oversell that. That's an answer that we simply need to work through technically and come through. If we're fortunate, we'll prove out the drift and fill works. I think that can be quite positive for the project. If not, naturally, we'll revert to the tried and tested room and pillar methodology.
Okay, great. What are some of the successes from phase one engineering that can be applied to phase two?
So phase one and phase two are a little different in characteristic. So phase one is where we're landing on design criteria. So as a good example, obviously we have, we've broadly changed the process flow sheet to the benefit of the economics and of course, even environmentally so. Uh, Naturally, as we continue on the mining side, we might see further optimization there. And we're also considering, tailings backfill to, I guess, shrink the size of the overall tailings disposal facility. So there might be ongoing optimizations as we think about process design. But really, phase two is a little more about advancing the percent engineered. So getting just more so into the drawings. I'd maybe refresh investors that feasibility studies are fantastic. They're an incredible blueprint for your overall project, but they're not highly engineered. So advancing that level of engineering gives comfort more so to debt and equity providers that the project is well understood, well designed, and advanced from an engineering perspective.
Speaking of debt providers, you mentioned the letter of interest from the Exim Bank. When would you expect them to make a final decision?
Yeah, so that's a process that we're working with them on now. I mean, as I think about it, ideally we would like the conclusion of that to coincide in part with our engineering. So as we step into the second half of 2026, we'll have visibility to that EXIM funding. But bear in mind, though, that we will be doing a pretty robust process. We can't rely solely on one area of funding. I think EXIM is going to be a wonderful path for us, but we obviously have to have assurances that we will work that through. So again, in the second half of 2026 is when we'd like to have clarity on XM.
Okay. Some other questions more to the big picture of the copper market. As you've been advancing and developing, there's been M&A activity. What do you think the merger of Teck and Anglo American will mean to Highland?
Obviously those are bigger fish than us, certainly. But I think just what you're seeing is just importance to the larger companies on the copper portfolio. And with good reason. Not just in the US, but copper is in shortage worldwide. What I'd like to have seen over the last certainly 6 months is that there hasn't been any, let's say, massive run on copper price. There's just been a growing understanding, excuse me, over the last few years. The copper is in short supply. We've seen some supply disruptions, and we've seen, of course, demand buckets just continue to increase. So I see formations like that just putting priority on copper and just another validation that the long-term fundamentals with respect to copper are very much in place.
You mentioned that copper is in deficit. Do you foresee that the deficit will get much, much worse to the point where you could see a real step change in copper pricing?
I don't like to get too much into that forecasting. Absolutely, it's possible. I mean, we continue to see supply disruptions. It's interesting, even the larger companies over the last 3 to 5 years have been slower to put major capital, and I'm talking about multi-billion-dollar investments into the larger projects. So the supply side, while already weak, is waning. We've also, as I said, seen some supply disruptions in the last period of time. So yeah, listen, I think there's a case to be made that could increasingly come to the forefront. If it begins to impact certainly defense applications, if it begins to impact, supply of energy to the grid in the US or other countries, there is certainly a case to be made that it could increase at a faster rate. But as I say, I like that steady growth from 4 up to 5, 550. Help investors understand, and mining investors who arguably are a little more conservative than they have been in the past. Just let that cycle play out methodically and with good reason.
You mentioned that the U.S. government has put a lot of focus on natural resources, security around critical materials such as copper. There's a big potential copper mine in Arizona that's been kind of stuck in development for over a decade. If resolution is pushed through by the executive branch, will that change the supply picture enough that suddenly this positive view that we have of prices kind of inching up over time would suddenly be altered?
Again, hard to guess. I mean, candidly, I think it's important for the US and globally that that kind of supply comes online. I don't think it fixes the picture, certainly globally, and arguably not even solely from a US perspective. So, you know, I'm a support. Like the nice thing about mining is that we all support each other. All of our supply, quite candidly, is going to be needed to meet the demand that is foreseen in the coming years.
Mhm. Well, great. You've given us a good picture of where you'll be heading over a relatively near-term time frame at that. Can you just kind of emphasize what you see as the key milestones we should watch for in 2026?
Yeah, absolutely. So as you look at the first half of 2026, we'll conclude on our design criteria for the mine side. I think that's going to be, good for us, and it's nice at the minimum as we continue on through detailed engineering. I think we'll get further visibility to both state and federal funding, what is available, and of course, come into conclusion on XM. Both of those allow us then step towards, a concrete construction decision in the second half of 2026. I think that is certainly our largest catalyst. That is what in turn gives us a view to production of copper in 2029. So I think we have some nice short-term, mid-term, and long-term catalysts that are really going to drive the company.
So if I have sort of schedule right, you'll be making a final investment decision in the back half of 26, beginning construction in 27, and then you think you'll have the mine operating and producing metal 2 years later. Is that fair?
Yeah, and I think it's also important to state those are obviously, our targets, our
Yeah,
goals. Certainly,
gotcha.
some things need to fall correctly for us, but that's what we're working towards. And even if there is some slippage from that perspective, man, we are near dated by any measure.
Yes. Well, fascinating presentation. You gave us a lot of information. Unfortunately, we've come to the end of our time, so I'll have to cut it off here. Thanks very much, Barry, for presenting. Thanks everyone in the audience for your informed questions and for your attention. Look forward to seeing you next time.
Thank you.
Very good.